Hi, I'm Scott Simmons. I'm an insurance consultant. I don't sell insurance and never accept fees or commissions from the insurance agents or insurance companies that I work with for my clients. Let's talk about bank civil money penalties insurance. The issue of civil money penalties has come on like a hurricane since the October FDIC FIL. The issue is the inclusion of CMP insurance as part of a bank's directors and officers insurance. The Directors and Officers Insurance Policy is a part of the management liability policy bought by most banks. It's the insurance coverage for directors and officers, protecting them from individual lawsuits. Two things to talk about: indemnification and D&O insurance. In your bank's bylaws, there are indemnification provisions. The bank agrees to reimburse you for expenses in a lawsuit against you because of your work for the bank. It's the assets of the bank that provide you with this indemnification. D&O insurance reimburses the bank for those indemnified expenses. It also pays some expenses not indemnified by the bank because of laws, regulations, or lack of assets by the bank. Indemnified expenses and non-indemnified expenses. Banking regulations don't allow civil money penalties to be indemnified by the bank. D&O insurance excludes fines and penalties from payment. So, insurance companies came up with an extra coverage to add. The CMP endorsement came on about 25 years ago. Some insurers added this at no extra premium. Some made directors pay $30 or $40 for the coverage. The October 2013 FIL says no bank insurance policy should include insurance coverage for CMP. It's pretty clear. If you have it, take it off. If you don't have it, don't add it. Your insurer doesn't care if you have this coverage or not. Frankly, I've never seen a claim. Any bank that an insurer thinks will have CMP assessed are losing their insurance well before the issue of CMP comes up. If your bank is in trouble, no insurer has offered you CMP coverage or the more important regulatory coverage for some time now. The solid banks are the ones with this policy and this coverage, and they never have claims in this area anyway. I hope that sometime soon a program will become available to sell individual CMP coverage to individual directors. Many good banks and good directors feel better having this coverage protecting them. I think they should be able to buy it. The FDIC will not protest individual policies as the transaction is separate from the bank's purchase of insurance. An individual director buying an individual policy using her personal funds. Of course, the premium will no longer be $40. It's important to recall that you're not naked without CMP insurance. Your D&O policies have exceptionally broad defense cost provisions. If there's economic damages assessed against a director, those expenses are covered by most D&O policies, unless there's fraud involved, and fraud is proven. You have insurance, just not for civil money penalties. Frankly, there are a great many other issues to worry about in your bank insurance. Does the bank buy enough coverage? What exclusions are included in your policies? How about coverage for suits against the bank itself for lender liability and employment practices issues? Focus on those issues. Review your insurance coverage. Most banks start their work with me in an unbiased review of their insurance. Simple and straightforward. You send me your policies and I report the issues and concerns that I find. We then work through the mitigation of the issues, unbiased insurance help and advice for banks. I'm glad to talk to you about your bank and your insurance. Call or email me.